Welcome back to another rigged recap. We are looking at Friday, March 13th, 2025. The market continues to sell off, but this is the most important lesson. Go down at the open, looking at SPY, down 3 strikes, 3.5, 3.69. You come back to the blue, and this goes whether you're using rigged, whether you're trading on your own, watching this wherever. If you do not break the blue line, which is the opening price for the session, New York hours, it is going back down. And that's exactly what happened. Open, NUKE, pulls back to the blue. You get a little bit of life here, and then absolutely nukes. There were some awesome trades here following CTE. Check. Minus 1.37. Bears, blue line, or after swing. So we can see these bears right here come in immediately after. Okay? All you need to be thinking is like this is just like a little bit late. You just came down from the blue and it's moving to 556, 2.5 strikes down. If you just waited, you get a bounce above this 557 strike. KTR fills for this alert right here, and boom, that is a perfect trade. Why? The price of SPY is never higher. It just goes straight down. That is a swing. That is one strike in, let's see how long. 10:49. Okay, you see the alert. You notice we are low. It just moved down. Love to get it a strike higher. And right here, this fills 10:54. 5 minutes. All you had to wait. 2 candles right above the 557 strike. And then it just nukes right below. Once again, you get another swing right here. Okay? We can love these bear bombs. Let's just turn off the returns and turn on the win rate. So we can see this and just say, hey, in the last 30 days, similar alerts have won 50% of the time. That means returned 100% plus. But we don't want it right here. You want it a strike higher or at least somewhere close to it. So, right here, you're getting 65 cents above the strike. Nice spot to hit it. We move into the red. Remember, this says, we can turn all the bombs off. Extreme risk, swing or nuke to the close. Extreme bear risk. And you'll notice we break below, it goes up. We break below, it goes up. But the important thing here is we're not even getting close to pushing anywhere near the blue line. And what do you see with this line right here? Volume is going up. And when volume's increasing, typically the move continues. And obviously, this is a down move. Excellent spot right here. KTR fills for all of these. And boom, 171% in 1 hour. No drawdown. Bang. This is a Friday. Fridays are always unique. Fridays are always crazy. We get down deep in the red. This is 8.5 strikes down. And these alerts do okay. There's always going to be a bounce at some point in time. And look, what do? They take us right back into this yellow zone. And boom, once again, decent trade here at the end. Ultimately, what you're looking for is following CTE. Check, trade, exit, right? So we turn on bears on only. Beautiful trade right here. And then once again, above the strike, this is 2 strikes, bang, bang. After that, you get down here. You're at $8.53 below the blue line. Go enjoy your day. Important volume spike right here. Expect the move to continue to go lower. You're looking for any kind of swing to get in. It's we can see all of these bears right here and absolutely love it. We love the trade. We love the setup that is bearish as you know what. but we don't like the position that it's in. You wait for the swing, boom, you're getting KTR filling. Awesome trade. Looking at Q, there were not very many alerts on the Q on Friday. Why? Because volume was much lower, okay? Very similar action. This is like the most beautiful thing here. When you bottom right here at 9 strikes down, love this alert. 46.34% win rate last 30 days for similar. You're like, hey, this thing just moved up a little bit. Maybe I can catch it below this 476 strike right here. And boom, that's what you get. KTR fills. Awesome, awesome trade. Even if you're a little bit late, you could have taken this one. But then once we move all the way up here, right? Remember, we're counting the strikes. 1, 2, 3, 4, almost 5. Okay? This is a down move. We are down from the blue line. This is an excellent opportunity to go short again. And if you did so, not a bad trade. You'll notice because volume's lower, our trade thing right here says edge high win rate bulls or bears at the blue line. We don't get anywhere close to the blue, but the win rate for all of these is pretty good, right? 46%, not bad. The important thing to know is, hey, if you don't get it this time, and these do okay, right? Because below the strike, you're getting a little bit, but anytime you're trading against, we're doing bulls below the blue, have to think it's going to keep going down, take the money, and run. Very similar on SPY. What do we know? Open is always going to be chaotic, always going to be crazy. You go down 5 strikes, pull back up. You can't break the blue line. Look at that. The KTR is filling for these. And that's the best trade. Even if you waited a second, you see these and you're like, hey, this is good. Wait for this bounce right to 475. Bang. We're below the blue line. You want this swing to go short. Now, there aren't a ton of alerts on Q. That is why SPY was significantly better. And it's just like, wait. Just be patient. It is going to bounce in the red. It always does. It never just nukes straight down. And then once you get really deep, this is -8. You got to be nervous. It is going to bounce and crush everyone chasing the move. These people all got absolutely ripped. What? Who won? After the swing into the yellow? Bam. Looking at IWM, pretty clean here. Pretty clean. Once again, down, 1 strike, back to the blue line, can't break the blue, absolutely perfect. You take this trade a second later, above the strike, 201. I mean, it's never higher. Wonderful. Love these bears, but you have to think like, hey, super low in the red. Could have attempted it here, but even better, 199. Always have to think in terms of strikes. You're down 4. Hey, it can bounce 2. It could bounce 3. And what happens? It bounces 1, 2, closes down -3. The only lines you need to draw, you need to trade, especially on Fridays, are the strikes. Love these. Look at that. 30-day similar alerts. Not this exact specific type, but similar. 52.17%. And it's like, what? You just look at it when it comes in, like, oh my gosh, we love this. But you know where we really love this? A strike lower. Because once you get into the red, you have to think they're going to test this next strike. And they try to test it multiple times. It can't break below. Beautiful, wonderful entry. We'll look at NVIDIA and Tesla really quickly. What did they do on this? Well, this is textbook mean reversion up to the blue. Can't break it. This is nasty. Like, that is nasty. The outline is red. This is disgusting. Don't even mess with it. They go back up to the blue. Can't break a strike higher. Comes back down. Not a ton of alerts on NVIDIA. Not great to trade. That's what we expect when the outline is red. Looking at Tesla, what happened here? You get a swing, NUKE lower. I mean, there are no alerts happening. And basically, you go down minus 5.5, pull up, nothing. You just have to think like, hey, if there are not a ton of option alerts coming, Wall Street is not actively trading it. And for Tesla, this is nothing. This is muted. Nobody really won here. Boring. SPY, boom, boom, boom. Lots of alerts. Great price action to trade. And just think, it says trade bears. Okay, after a swing, big swing right there. Nice swing right here. And then once you get deep into the red, just be afraid because they are going to crush everyone down here eventually. I mean, this one, these all lost. Why? They're late, right? They are late. Overall, a little bit of a difficult Friday. Not the worst we've seen, but keep the bear suit on. Follow CTE, and you're going to win more trades. Let's hope the volatility, the fun, continues next week. We'll see you all live in Discord.